$100 billion. Let that staggering number just sink in for a second. We're looking at a company right now with a stock sitting at $374 a share. And on the surface, the machine is churning out record-breaking top-line revenue, crossing that $100 billion trailing 12-month threshold for the very first time. But beneath that shiny exterior, deep in the depths of their financial statements, a darker, much more intense story is unfolding. There's this massive high-stakes transformation happening right before our eyes, and it's going to fundamentally dictate exactly where that $374 stock price is headed by the end of 2026. So keep watching, because by the end of this explainer, we're going to reveal exactly what that prediction looks like. Welcome back to the explainer. Today, we're executing a fast-paced, absolutely uncompromising fundamental analysis of Tesla's Q2 2026 update. We're going to strip away all the noise and look directly at the hard data. Because right now, we're looking at a company caught in a serious fundamental paradox. We've got bleeding margins on one end, while they are simultaneously executing literally the most aggressive sci-fi level capital pivot in corporate history on the other. So, here's our roadmap. 1. The revenue milestone. 2. The margin paradox. 3. The AI and autonomous pivot. 4. Powering the infrastructure. And finally, number 5, the future automation outlook to make that 2026 prediction. Okay, let's dive right into this. Section 1. The revenue milestone. Top-line dominance. Now, to understand the shadows, we kind of have to look at the light first, right? Tesla's core business is an absolute juggernaut. I mean, we're seeing over $100 billion in trailing 12-month revenue. That's their total sales over the last year. They just achieved record second-quarter vehicle deliveries, showing just ruthless strength in established markets and pushing hard into new ones. Oh, and the energy storage business? It isn't just surviving, it's returned to violent growth with record deployments. And services just hit a record profitability margin. So the metal-bending, battery-building core of the company is basically firing on all cylinders. But that is exactly what makes our next revelation so chilling. Section 2. The margin paradox, the underlying tension. You'd think if the top line is breaking records, the bottom line should be absolutely swimming in cash, right? Well, wrong. The fundamental accounting tells a highly contrasting, honestly, almost terrifying story if you aren't paying close attention. Just think about the brutal divergence going on. Total revenues jumped from roughly $22.5 billion in Q2 2025 to over $28.2 billion in Q2 2026. Sounds great. But the operating margin? It plummeted down to just 1.4%. Income from operations completely collapsed by 57% year over year, dropping from $923 million all the way down to a mere $398 million. The core auto business is facing lower vehicle average selling prices and a drop in regulatory credit revenue. So, they're making more cars, they're bringing in way more revenue, and yet the profit engine is choking. Which leads us to the million-dollar, or actually scratch that, the billion-dollar question. In a quarter with record deliveries and $28 billion in revenue, why is the free cash flow suddenly negative? Where exactly is the lifeblood of this company draining to? Well, free cash flow hit negative $1.1 billion in Q2, and that resulted in a $1.2 billion decrease in their overall cash and investments. Now, for a traditional automaker, a financial bleed like this, while margins shrink to 1.4%, that'd be a death knell. It would send that $374 stock price into an absolute death spiral. But as we know, Tesla is definitely not a traditional automaker. Section 3. The answer, the AI and autonomous pivot. The tension totally breaks when you realize this cash isn't actually being lost, it's being weaponized. Tesla explicitly states they are in the largest, most exciting period of investment in their entire history. Look at this number, $5.789 billion in capital expenditures in a single quarter. That's a staggering 142% year-over-year increase. This is where the cash is vanishing. It's not operational failure at all. It's an aggressive, highly calculated redirection of capital. Traditional automotive margins are being actively sacrificed on the altar of artificial intelligence, basically to birth an entirely new autonomous paradigm. And there is physical manifestation of this capital happening right now. This isn't some slick concept rendering. We're talking about the purpose-built Cybercab, actively on the production line at Gigafactory, Texas. I mean, this vehicle has no steering wheel, it has 0 pedals, it is designed from the absolute ground up to be the tireless workhorse of a global robotaxi fleet. And engineering test drives on public roads? They've already begun. But look, the hardware is totally useless without the ghost in the machine. That $5.8 billion in CapEx is funding the real-world deployment of their AI. The robotaxi network is no longer just some localized experiment. It's ramping unsupervised in major metropolitan areas right now as we speak.
Just think about the sheer speed of this aggressive deployment timeline. They're ramping unsupervised rides in Austin, Dallas, and Houston. In July alone, they launched unsupervised rides in Miami, Orlando, and Tampa. And preparations, which includes all the complex permitting and first responder training, are already underway to take over Phoenix and Las Vegas. The autonomous fleet is rapidly spreading across the map like this massive digital nervous system.
And if you want to know just how dark and committed this pivot truly is, consider the Fremont factory. Tesla literally decommissioned the manufacturing lines for their flagship luxury vehicles, the Model S and Model X, just to clear out space. For what? To install the first-generation production lines for the Optimus humanoid robot. They are literally tearing down the old symbols of their automotive dominance to build artificial walking labor. I guess the robots really are coming for our jobs, huh? Starting right on the factory floor. Section 4, Powering the Infrastructure.
Now, to control millions of autonomous machines, you need incomprehensible back-end infrastructure. The computing power required to train these neural nets is just immense. Tesla is quietly building a massive, vertically integrated empire. During the first half of 2026, they more than doubled their on-site compute in Texas to over 205 megawatts across their Cortex-1 and 2 clusters. They're literally building their own semiconductor fab in Austin to make sure they completely control the logic and memory chips essential for their AI. Add to that the scaling of the 4680 battery cells and the Megapack 3, and you realize they're vertically integrating the entire future of automation.
It all coalesces into this, what Tesla calls a unified system of amazing abundance. The solar generates the power, the Megapacks store it, the Cortex supercomputers process the AI data, and the Cybercabs and Optimus bots execute the physical labor out in the real world. Every single piece seamlessly feeds the other. This isn't just a car company ecosystem, this is an entirely new closed-loop civilization operating right within the global economy. Section 5. The Future Automation Outlook. Which finally brings us to the climax of our analysis. We've seen the $100 billion in revenue, we've seen the margin collapse, and we've seen that massive $5.8 billion capital pivot. So, will this massive, margin-crushing investment actually pay off? Well, the answer lies in the data advantage. The tracking on cumulative miles driven with full self-driving is approaching a mind-bending 12 billion miles. In the world of AI, data is literally the only currency that matters, and Tesla holds an insurmountable monopoly. The scaling isn't linear. As they roll out these unsupervised robotaxis, the data collection accelerates, the AI gets smarter exponentially faster, and the moat between Tesla and the rest of the world deepens into an absolute abyss. Tesla's own outlook reveals the endgame here. They expect an acceleration of AI, software, and fleet-based profits over time. So let's address the suspense. I promised you a prediction for where that $374 stock price will be at the end of 2026. Based purely on the fundamental data we've analyzed today, $374 is the ceiling for a traditional metal-bending car company. But it is the absolute floor for a real-world AI monopoly. By the end of 2026, as cybercabs start replacing personal ownership and Optimus actually begins augmenting labor, the financial model is going to completely flip from low-margin hardware to near-infinite margin software and fleet services. The margins won't just recover, they'll mutate into something Wall Street hasn't even fully priced in yet. The scaling will be entirely nonlinear. If they execute on this massive infrastructure, the stock at the end of 2026 won't just be higher, it will represent an entirely different species of company. The transition from metal to mind is happening right now. The real question is, are you watching closely?